All right, supposedly we're live and good. Hello, everybody out there, wherever you are, whatever platform you're on. Welcome to the morning show. What's going to happen with OPEC decision? I don't know. Do you mind saying what studies do you use in the scanner for prospecting? There's a whole lesson on that in my market mastery. So you just got to click the link in my profile, and then that's going to take you to my website, and then go over to Learn to Trade and sign up. And it's a lesson called How to Find Stocks to Trade. All right, we've got 7 minutes before the market opens. All last night, Asia session. Let's go take a look at it. Asia session was red. London came in, went back to a 50% retrace on the Asian session at that time. Couldn't hold, went red, and is still bleeding this morning. Asian session closed a little bit ago, 30 minutes ago. And we are now back to yesterday's close. Let me see. Yesterday's no, we're going to be opening below yesterday's close. In fact, just about nearly below yesterday's low. Nearly below yesterday's low. I do believe that we're going to go run and test the London high, the open and the high for the first morning rally here, but I think that's going to be a bull trap. And it's going to top out, and we're going to go red for the next few days. That's my current, momentary, as of this moment, kind of outlook. But that could easily change and be wrong. So we'll see how that goes. But I'm seeing some signs that's the way things are going to go. We also got the VIX with some bullish divergence, so we'll see if that plays out at all. Maybe it's just for the bull trap. We got here gold is down to 1640s. Up a little bit. Oil's at 83-ish and holding. And Bitcoin's at about 19,000, as some of you probably know. All right, we got about 5 minutes before the open, and we're watching this stock, RDHL, momentum mover. And it's just been going straight up flop this whole time. It's basing now in the 80 cents area, and it does have a history of continuing on these spiky moments for 2 to 4 days maximum after the initial move. And today's the initial move. So I think the idea here is to get in for a multi-day move. And for that, you'd want to be getting in only on pullbacks and dips. And to know which pullbacks and dips are the best ones to enter on, you'd be looking for flushes. So what would look like horrifying drops. You want to get in once those start to decelerate at the bottom. That would be an entry point to DCA, to dollar cost average, in over the day today, get a good price moving into tomorrow and the next 2 days. If today goes bonkers, you got in at some nice dips, and you can be selling underneath every 5-cent level. Probably be a good idea. What was I going to say about that? No, that's good. Also, we are watching Netflix. Should positive happen there, but it doesn't look like it. It was up, and then it's been fading, and the market is fading as well near the open here. If the market does go red today, if today's bar is red, if we go under the open and we hang under the open, and we trend under the open, and we stay under the open, if we go red today, I do believe that's going to potentially be with a lot of there'll be a battle. I think there's been a lot of positioning down there, and there'll even be some defending of that position. There'll be some dip buying of more, doubling up, etc. I think that it's going to, the downside here comes with a lot of support to work through. Don't believe, and I could be wrong, but I don't believe that that would create a panic drop type of situation, although the drops initially could be very panicky. Just that I do believe they'll be bought up and defended. That is if we go red. My prediction is we got a bull trap set up here at the open, and we're going to run to the London Open and high, the overnight London Open and high. There goes RDHL for a momentum breakout. That would have been 85 cents, 87 cents roughly breakout. Now it's 91 cents. So it's acting like a momentum stock right now, so you might as well play it like a momentum stock. And grab those breakouts with risk to the bottom of the pivot. In this case, about 80 cents should be your stop. And the entry is right now at about 88 cents, which is right where it's at. How did you, Benjamin, how did you type DCA and hit return with question mark faster than how I explained it immediately right after I said it? Like, do you have any patience at all? Like just a micron of patience would do you well, my friend. A micron of patience. He's like, micron, MU, should I buy? All right, market's opening in 1 minute and 30 seconds. We are watching RDHL. What's this science project? What arrows? Do the arrows repaint? They do, but only after one candle, and that's supposed to. Those arrows are putting in certain pivot points called fractals. You're quietly listening in the courthouse. Gotcha. Quietly listening, very attentive. Netflix was not going crazy in pre-market. You might mean after hours yesterday, yes. But it's pretty much fading now. All right, the market's about to open. 20 seconds. All right, we're starting to get bought up right before the open. Sell-off starting right at the open. Buying, selling right at the open. Right, the market is being bought up. That's just in the first 10 seconds. Actually happens here. And RDHL is just sitting there. Netflix fading. The market rallying. That's the first rally. About 40 seconds in. Right. It looks like so far, I mean, I'm only a minute in, but it looks like my diction could be correct. There's a bull trap run to the London Open and highs overnight. And RDHL is starting to curve up, looking good. 92 cents for a momentum play, plan A. Market pulled back for that second minute here, and it's now attempting to make a higher high. And there it goes, moving up. That is what I was expecting to happen. Bit of a pullback here. Minute number 3. We are establishing an opening range here. We're right in the middle of it at the moment. Swap of the open, if you will. All right, we're attempting to test the highs again on the market. Here we come. Like we're going to pop the high. There we go. We just popped the highs. Catching my stop to the 200 moving average on the 15-second chart, which would be the 50 on the 1-minute chart, in an attempt to capture this opening move. And it is happening. We are about, let's see. We are already about 60% of the way to the London Open. All right. So this is likely a bull trap setup. We're now 3/4 to the open, London Open. You're hurting rabbits. Hunting rabbits. Why did I say hurting? I'm hurting rabbits. Shh, be quiet. I'm over here torturing rabbits. Wascally rabbits. Anybody position long for the retrace to the London Open with me? I got that going on like 4 accounts. Weirdo. What are you doing torturing rabbits? RDHL has pulled back. We're still looking for like a flush down entry for a plan B entry on that. All right, we got new highs going in on the market. A market, dude. Stop. Attached to that indicator. All right, let's go jump that up to the next level. $20.50. Yeah. All right, we're getting some resistance here at yesterday's close across the market. Yesterday's close. What's up, Mark? Me. Oh, to 275. Oh, good. Okay, good. Good for you. That's about where we are, no? Uh, oh wow, 275. That's what you're thinking? Well, that would be seriously bullish. I'm at least gonna take it off a little bit lower than that. Is what I'm trying to get at. It would be the equivalent of like 273. And it looks like we're bouncing off the 20. Runners, okay. Lucky you. Probably should be a little bit more defensive in this count here, but that's the way to trade. Pivot points, the liquidity areas, they're all there. How is RDHL doing, guys? No word from you guys, huh? Great. I would get so excited with a flush down. Okay, look, we're all the way back to VWAP. I mean, that's exciting to talk about. RDHL's all the way back to VWAP. You know, it's starting to get to be a tasty entry point. Bounce off VWAP is a thing. Gonna put some money in there. You're gonna get a little green candle. It's gonna kick off a small move, and then maybe flush down. All right, we're pulling back too hard. I'm closing out this move. Did not hold the pullback. That move back to the London Open. That looks like that could be the top, and that's all we've got in us, possibly. We're now going to go red on the day, I think. My assessment of how things are moving. Netflix is progressing upward. Up there goes SCNS. That's a very good breakout on SCNS at 42 cents roughly, and a very wide spread and low volume. SNES. You have to put your stop down at like 30 cents, and that's a 42-cent breakout. It's almost a 30% stop. And the first 10 minutes of the market have been put in, and it looks like low volume, the lowest volume we've had in 5 or 6 days. And there we are. We're red on the day now on the daily candle of the market. Boy, there goes SNES. Who got in? It's already at 56 cents. It hit from the 45-cent entry I was just talking about. That's like, I don't know, 25% gains already. SNES. Hale just said he's going long here on the market. Hale's cool. Yeah, bear trap, says Mark. So I don't know. I'm looking at the bigger picture, a little bit of the bigger picture. We are now up and over the trend line on the descending bearish trend line on the market. Not now, yesterday we poked through. And if today can't get up over that high, then the last 3 days signifies a swing high. And every time we've hit a swing high on the market, we've gone down for the next several days. So I think that's it. Here we're going red. I don't know who's taken that into consideration, but I have. So it does not mean that we can't get all the way up to like where you said, Mark, 275, way up, nestled up underneath yesterday's highs and close. I just don't think it's going to happen because of all the patterns out there coming together in confluence and fueling people's outlook today across all the different styles of trading. Put it all together, and I don't think we make a green day today. Very much of a green day. Looks like Pale's bounce might be coming into fruition here. Okay, there's the first flush under VWAP on RDHL. That's a potential worthwhile entry point there once it decelerates, if not right now. That's at 78 cents. It did already break pivot at 80 cents. So everybody above that could be dumping. So be watching for further flushes. And then potentially it may base out. Where? We don't know. SNES is back to 48 cents, pulling back to VWAP. Meanwhile, Netflix continues to grind up. It opened at 265. It's now around 270. It hit 272. Yeah, there goes the market. That is the devil's hand pattern. RJ came up with the name for that one. I call it the inverse Atlas pattern. But the devil's hand is a very bearish pattern. We're probably going to break down in a moment here. And that's what happens when you don't have a trending day and you have a day filled with reversals and liquidity runs. It's very hard to get ahead unless you have 3-to-1 type setups or better. It's very hard to get ahead on a day like today. So I'm already pre-acknowledging that for myself mentally, so that I know that this is a non-trending day so far as the way it's shaping up to be. And you can know that when like a second pullback fails. Can't get 3 rallies, and you've got chop. Yeah, and Pale just said he's about to cut his position. It's not a risk on kind of day. And let's take a look at rates, by the way. Wow, fantastic. Rates are still going up. We got the 30-year at 4.1 now. Can you imagine getting 4.1% on your money, 100% risk-free in US Treasury bonds paid into your bank account for 30 years at 4.1%? You just don't get these rates very often, folks. And then this is going to continue until March. It will top out at some point. You might be able to get 5%, maybe even 6% for 10 years, 30 years. Make sure you go to treasurydirect.gov and start, DCAing, dollar cost averaging into some of these bonds. You can buy up small amounts. And if the market crashes and they have to lower rates, your longer term bonds become much more valuable because you're holding the bonds with the higher payout. So bonds go up 25%, 50%, 100% in their sellback value, in their tradable value, if they have lots of time remaining and they're paying out such a huge rate. But it's like, damn, you wouldn't even want to sell it back. That's a great purchase. It'd be like buying a great, it's just a great investment. It's a great investment. But in order to protect your savings and your money for the next year or two, or even 6 months, you could get I bonds at 9.67%. You could get the 1 year at 4.5%. You can get the 2 year at 4.5%. You could get 5 years at 4.3%. So, you ought to have that sprinkled into your, pyramid of wealth down at the bottom. Most secure and largest amount of your wealth can be in U.S. Treasury bonds. This is a great time. You're going to hear me talking about that a lot for the next till March, maybe even summer of next year. Okay, here we go. Market looking like it's going to break down. If I can get in there fast enough, I'll take that. Nope. Got supported. All right. LMT, Lockheed Martin, entry yesterday alert, up. It's up today, another almost percent. And I also said Northrop Grumman, that is down just a smidge, but holding firm. Oh, the market is holding this base, so this is a sign that we might be going for another run, like a double bottom W pattern. Well, what about inflation? I mean, for example, you can get the I bonds, well, only up to 10,000 per year per person, and then another 5 in your tax return. But the I bonds are inflation protected bonds, and those will give you 9.63% right now. Just go to treasurydirect.gov, set up your account. It's a pretty shitty looking site. It looks like the DMV or some shit. And but that's the way it is. Link it up to your bank account, ACH, and in less than an hour, you can go in there and you could buy bonds. If you don't know which ones, and you've got a lot of money, you can experiment. If you don't have a lot of money, try to find the one that says there's bills and then there's bonds. You want to get the U.S. Treasury bonds, not necessarily the savings bonds. Otherwise, the savings bonds are good too. But you would get the bonds that are paying out like the 1 year and the 2 year or the 5 year. They're paying out 4.5%. There's absolutely no better time in your life to learn about doing this because you won't have another opportunity like this for another 20 years. In 20 years, you will wish you spent the time taking advantage and putting all your money into all these bonds that are paying out so great, because that's just going to provide a base income for you for the next 2, 5, 10, 30 years. And you won't be able to get that kind of like secure income from stocks. That's why the stock market's going down, because U.S. Treasury bonds are so high in their return. At a certain point, there goes SCNS, guys, breaking down. Careful. That's a retest, pivot, neckline breakdown, and flush down at flop. It's a little bit of everything failing all at once. Anyway, the stock market can return 8% per year on average. 6, 5, 6, 7, 8, 9, 10% per year on average. However, that's during good times. The prediction right now is that the next 15 years is going to be flat. The next 15 years. So you want to at least have 20-year bonds to cover that, because you want a return on your capital, and you're not going to get it on the stock market. As far as, the large, more secure bottoms base portion of your wealth pyramid. And so here's the other positive benefit. If there's ever a crisis in the world or in a US economy, essentially, and they have to lower rates, your bonds become more valuable. The more time they have on it, they pay out at 4, 5, 6%, the more valuable they become. And so, if rates we're supposed to go back to 2% by 2024, 2025 in that area. Right now we're hiking rates, but then they're going to come down. So it's literally a self-guided capital appreciation trade plus 5% income. It's a complete no-brainer. It's outlined by the Fed, the whole schedule. You couldn't get a more manipulated, accurate prediction than the Fed literally mapping out for the next 2.5 years how they're going to peak in March and then start bringing things down at the end of 2023 until through 2024, and it's going to level off at around 2.25% in 2024 and 2025, and you're going to be sitting on 30 years paying out 5%, 10 years paying 4.5, 5.5%. That becomes more valuable. So your capital, the amount that you put in, is also going to go up, because the tradable value of those bonds will be worth so much more, because everyone wants the bonds that pay out more. But you just might not want to give up on them. But maybe you want to buy a house or whatever, and now that money will have capital appreciation. It'll go up 25, 50%, 100%, depending on the situation with the way rates go. And they will in a crisis, an economic crisis, if the stock market crashes considerably, they'll have to lower rates in order to re-stimulate the economy again, and that will cause those bonds to spike. And so they'll really go up in value in that situation. There you go, Justin. And in fact, I think that you can set up auto purchasing of bonds from your bank account on the treasurydirect.gov website. And another thing you might want to check is the checkbox that says reinvest those bonds when they're mature. But you could uncheck that, and it asks you, where do you want us to pay you? You know, the US government wants your money. That's how it's going to vacuum up and suck up all the extra supply out there of dollars and get us back into a positive situation with our debt. And that's how it's going to do it. It's going to suck it up by creating attractive rates. It's going to get to the point where it's so attractive, they won't have to entice anyone anymore. And we're getting close to that point. It's getting there. Why would you put your money in the stock market right now if you can have that? Any questions about that? It's a big thing. We'll talk about it more and always for the next probably 10 months, maybe a year. No, probably 10 months. In a year, I'll be saying, remember when I told you to buy bonds? Who's up? Everyone's going to be up. Everyone's going to be getting those payments in your account. They pay out twice a year, every 6 months. So if you get a 4% or a 5% bond, you're getting that 5% paid out twice a year, not at 5%, at 2.5% roughly. It's an amortized type of calculation, compounded, but you're roughly getting, half and half. You get it every 6 months. It automatically will show up in your account. And like what Justin said he's doing, no, there's not, Abdul. You could buy millions of dollars if you want. And what Justin's doing is he's going to buy every week. I think he said $50 a week. That's great, because what's going to happen if he did that for 1 year is he's going to see the payments coming every week then for the rest of his life, however long he's buying. He's buying 30 years, 10 years. I don't know what he's getting, but for as long as, like let's say you think the stock market is going to be a bull market for 10 years, incredible 10-year bull market in 2 years. Then you get yourself 2 years. So for now, you protect all your money. You're protecting your money against crashes because it'll go up in value if there's a market crash. And you're getting those regular payments as well and full capital preservation. Like, what's better than that? Go get a job, make the money, and start buying those. That's the best trade out there right now. Not to mention, if you can do that on the 30-year, you're really putting yourself in a good situation, because the outlook does look to be that it's going to take 10 to 15 years for us to basically be breaking the highs of the market that we had last year. 10 to 15 years. So we'll go down, we'll go up, we'll go down, it's just going to chop. It's going to chop. And at any time you can trade them back into the market. If you open a brokerage account, you can transfer your bonds that you got at treasurydirect.gov over to any kind of a brokerage account like Fidelity that can harbor bonds and trade bonds for you, and then you can just sell them right back. I-bonds have a limit. Yeah, I-bonds have a yearly limit of $10,000 per person, plus $5,000 roughly. You can look up the exact limits, plus $5,000 on your tax return, so about $15,000 per person. But that's I-bonds, and that's at 9.63% right now. But you're just an idiot if you don't buy the 2 years and the 5 years, because you don't find it as attractive at 5% as a 6-month I-bond at 9.63%. I mean, you're just missing the bigger picture. You don't go chasing the yield so much. as the fact that it's total capital preservation, it's stock market crash, like lottery tickets, and it's income, annual income paid out semi-annually the next however many years you buy. And you're gonna regret it in 10 or 20 years, because you won't see that again if you don't take advantage of it before March. No, those are savings bonds, Eric. All of them. Somebody says, which bond specifically are you into? I'm buying up all of them. You should just buy a little bit of everything. It's better to have than to have not when it comes to these bonds. The bond ETF is not, that can be a trade that you do, but that's not going to provide the same thing. It's not going to provide the income. It's not going to provide the capital preservation. By the way, your values of your bonds will go down if the rates go up higher than your bonds, but the value of the bond goes down, but not if you decide to just hold it until the end of its life. You're going to get all your money back. But by the way, rates, they may top out here, they may go up a little bit more, but they're supposed to end in March. The rate hiking, and so it's just a good idea to be sprinkling in and dollar cost averaging in over the next, until the market can front run that the rate hiking will be ending in March at some point here. So long as there's still doom and gloom out there, these rates are going to keep going up. So we don't know. We don't know. Are we at the bottom of the stock market right now? We don't know. You don't have to guess though, because your money's completely protected. Full capital preservation. Now, you might not want to sell back, trade them back in a half a year when rates might be higher, because that will make the value of your bond lower. But if you can think a little bit beyond that, like a year or two or three, if you were saying to yourself, oh, I need that money back in like 1, 2, or 3 years, the value of your bonds should be back to where they were, if not even higher, because rates will be down to about 2%. And if you're sitting on a 5% bond and rates are at 2%, the value of your bond's probably more than 50% gone up in value. The money that you put in there currently, until it pays out, that'll diminish because there's no time left, so no one would want to buy it. But if there's a lot of time left, like a 30-year bond or a 10-year bond or a 20-year, then it will have a lot of value left on it, you see. And people will buy that back. But the value of the bond is not, the value of the bond to other people is not the amount of the bond. So in other words, the dollar per dollar tradable value of the bond really doesn't mean much. What matters is what is the total return of all the payments over the next X number of years that bond is worth, because other bonds are now worth much less, in the future, like in a year or two, are worth much less. And so your bond is literally worth more. It's got more money on it. And so you don't want to sit on it and somebody else does, they'll buy it from you, for probably a little bit under cost, but under the cost of the total, payout value. But if you want your money back, you'll be able to sell it back at a higher value. This is the time for you guys to get really good at bonds and understand bonds. This is the time. These are the times in history, when the markets have crashed and they start raising the rates after they've stimulated the economy. We've got this inflation situation because of the stimulation to the economy they did, all the money printing. And then they got to raise rates in order to calm it all down. And this is sort of an epic inflation event. And so it's kind of an epic rate hike event. And I don't know where bond rates are going to top out. But that's why you just get in a little bit here and there, and with money you can forget about, basically the bottom of your wealth pyramid, the most solid foundational part. SCNS is kind of holding at around 50 cents above VWAP. That's a very good sign. And you've already seen how it can behave. So, you could expect another leg like that. It went from basically 35 cents at the open to 55 cents. So about a 20-cent pop, whatever percentage that is, but we can just relatively speaking say that, okay, from VWAP, if that happens again, we're going to go from 50 cents to 70 cents. Market is trying to make its way back up to that London Open. I don't know how much I trust that. It's looking fairly green. Oh, wow. NOC is moving. Let me see. Nice. All right. NOC from entry yesterday, up, up, up. LMT, ooh, way up. 2.5% almost today already. And yesterday's entry was much lower than that. Oh, thanks. Yeah, that's just to reiterate, it's not treasurybonds.gov. No, that's not correct. It's treasurydirect.gov. Be careful not to go to some kind of a website that's the incorrect website. Be careful. Yeah, there goes LMT. Hopefully you didn't sleep on that swing trade alert yesterday. The relative strength on that was fucking insane. That alert on LMT over in the swing 100 went out. And that could potentially, go up to 500 in the next couple of weeks, maybe less. Especially at this rate of return. All right, we're at the top of the hour. And we do have comms coming up right now. Comms, COMS, it's about to break a trend line. It's definitely over VWAP comms. I would jump on it. Comms, COMS. Green and blue logo. Is it? Wait a minute. That'd be funny if Mark, like if you went and registered a website last night, you're like, oh, Evan's gonna be talking about this a lot. And I'll just get in the group and I'll post my link, my domain name. Oh, actually, yeah, you can't get a .gov domain name without the right credentials. I forgot. That would have been a good one. Anyway, it's treasurydirect.gov. Somebody said top-notch info on the bonds. Crazy how much you know. Thanks, man. I will just say this. I think it's crazy how much I know too, except that I also am aware that I know so little compared to how much there could be to know about the stock market, investing, bonds, macroeconomics, fucking every financial instrument out there. It's crazy. I am just simply aware that I have 25 years of knowledge and experience. That's a lot. I can does somebody beat that here watching the stream? No, that's why you should be watching me and I should be telling you everything I know. If somebody else is out there with 50 years of experience, go fucking follow them. I do. You know what I'm saying? It's just, yes, on the one hand, I agree with you. It's crazy. It blows my mind. Like it literally, like I have snapped neurons like I have, what do you call it? A nervous breakdown. I'm like on the brink of nervous breakdown with the amount of knowledge I have packed up here. It's ridiculous. It has to be tempered for sure. But doesn't mean I'm right about certain things, right? It doesn't mean I can predict the future. It doesn't mean anything as far as that goes, but it's just knowledge. Like you said, crazy how much you know. That's it. I can acknowledge that. I got 25 years of knowledge. And but will it be uh financially leverageable for you? We'll see. We have 200 years of knowledge combined. Um, but I learn every day. Every day I'm learning something. Every single day. I'm always studying the markets. There's always something to learn. Just got a bunch of books that I gotta blast through. RDHL looks like total failure, guys. Not looking good with the pivot breaks under VWAP. Might be something that you could try and buy at the end of the day if it's way, way, way down, in the hopes that in the next few days it pops off of that level, but not looking good. All right, everybody, let's move into the group. Top of the hour now, and we pretty much got this market under control and wrapped around our finger and figured out that we don't know what the fuck's going on. We know that much. See you in the group, guys, over in the Momentum channel and the member chat area and the Active Trader Lounge. And don't forget to be watching the alerts. Mark's putting out his alerts, by the way, over in Mark G Alerts. Don't forget to go check out the Mark G Alerts. He's got some alerts going on in there. He's got some good ones. Not that he would have bad ones. All right. Bye, guys. Just don't be sleeping on those alerts. We got intelligent people here.